If you run a home care agency and you use your vehicle for business purposes, there's an important tax rule you need to understand. Vehicle deductions can create valuable tax savings, but only when they're properly documented. And one of the biggest mistakes business owners make is assuming they can estimate their mileage at the end of the year. That's exactly the kind of thing that creates problems. I'm an enrolled agent, a federally authorized tax professional with over 14 years of experience in tax and accounting, and I focus on helping home care agency owners understand their numbers and stay compliant. Now, it's important to understand that not all driving is deductible. And this is where many business owners get confused. For example, driving from your home to your regular office location is generally considered commuting, and commuting is usually not deductible. But driving between clients' homes, caregiver locations, staff trainings, bank visits, supply pickups, network events, or other business activities may qualify as business mileage. And that's an important distinction because once people hear I use my vehicle for my business, they often assume every mile counts. But the IRS looks at the business purpose, not just vehicle ownership. And while we're here, let's clear up a very common myth. Simply putting your logo or business information on a vehicle does not automatically make the vehicle a business write-off. I hear this misconception all the time. The IRS still looks at how the vehicle is actually used. Business use must be documented, which brings us right back to the mileage log. Now, here's something many business owners miss. The mileage log is one of the most important records for this deduction because it's not just tracking miles. A good mileage log helps support the date of the trip, where you went, the business purpose, the miles driven, and ultimately your total business mileage, commuting mileage, and personal mileage for the year. That's why I strongly recommend tracking mileage throughout the year, not trying to recreate it during tax season, because the mileage log is often one of the first records the IRS will want to see if they ever review the deduction. And this is one area where technology can really help. I strongly recommend using an app to track mileage. If you already use QuickBooks Online, there's a mileage tracker built into the mobile app. Many business owners also use Mile IQ. The goal is to capture the date, where you went, the miles driven, and most importantly, the business purpose. Because if the IRS ever reviews the deduction, the mileage log is one of the first things they'll want to see. Now, let's briefly talk about two methods used for vehicle deductions. The first is the standard mileage method. The second is the actual expense method. And the better option depends on the situation. Generally speaking, the mileage method often works well when annual mileage is high, personal use is significant, or the vehicle may be sold in the near future. The actual expense method may become more attractive when the vehicle is expensive, business use is very high, or the vehicle will likely be kept for many years. But regardless of which method is used, the IRS still expects documentation, and that's why the mileage log remains so important. Good records create stronger deductions. Poor records create weaker deductions. Now, let's briefly discuss S corporations because entity structure matters here too. If your agency is taxed as an S corporation, Vehicle expenses are often handled through an accountable plan, which means the business reimburses the owner employee for properly documented business mileage and vehicle expenses. And when structured correctly, those reimbursements are generally not included in the employee's W 2 wages, which can create a more tax efficient result. But once again, documentation matters because the IRS isn't simply looking for a deduction, they're looking for support. Now, one final thought: the goal is not to simply claim deductions, the goal is to support them. Because if the IRS ever asks questions, clean mileage records matter. Now that you understand vehicle deductions, the next question becomes, can you legally hire your children in your business? Because this is one of the most misunderstood tax strategies available to business owners. In the next video, I'll walk you through what the IRS allows, what the rules are, and when hiring your kids may actually make sense. And once you understand that, you'll have more clarity around your deductions, more confidence in your record keeping, and fewer surprises at tax time.